This is one of the most requested topics that I have on this channel right now, is how to get started as a complete beginner and how to figure out what investments you should start getting into in the beginning. So by the end of this video, you'll be able to figure out how to open up a brokerage account and get a free stock with that. And in addition to that, how to choose your first investment type. There's so many things out there. There's stocks, index funds, cryptos. So we're going to cover the different risk levels of each one and really what you should get started with. A lot of the times when people hear the term investing, they immediately associate it with stocks. Keep in mind that there are other investment types as well, stuff like crypto, Bitcoin, Ethereum, or stuff like index funds, which are a basket of stocks. So we'll start with what a stock is first, and then we'll go into defining the other ones and talking about the risk levels. So with a stock, it's a partial ownership of a public company. So if you think of Amazon, Google, Facebook, you can buy a partial ownership of that called a share. So one share is going to have a specific price that fluctuates throughout the day. And so what that means is you can buy it at a lower price, and the way you can make money with stocks is if you sell it when it's at a higher price, called stock appreciation. The second way to make money from a stock or investment type is through something called dividends. Dividends are a way, and not all companies provide dividends, but some of them do, like Coca-Cola is an example, Simon Property Groups is another example, but there's gonna be a line item when you look at your stock before you purchase it called DIV, it stands for dividends. That's gonna be a percentage. Every quarter, meaning every 3 months, they'll pay you out, and you can do two things with your dividends. You can either take it out to your bank account, or you can reinvest it. And so when you start off with a small amount, your dividends will be pretty small. And again, there's always risk associated with investing. The key thing here for new investors is to how do you limit that risk? No matter what type of investment you start off with first, whether that be index funds, stocks, or cryptocurrencies, make sure that you start off as early as possible. The reason for that is there's something called compound growth, meaning the earlier you start investing, the more time it will have to grow faster and faster. Think about it as kind of like a snowball effect. If you learned something new so far, make sure you like and subscribe below so you get future updates on different investment strategies and how to make money online from home that you can replicate as well. In addition to that, feel free to share this with a friend that's new to investing or hasn't started yet. You can invest with as little as $5. So if you want to invest in the company Google or an index fund that's $300 and you don't have $300 because that is a lot of money, what you can do is you can buy a fraction of that. And so a lot of different brokerages will offer this feature, and it's pretty much you just put in how much money you want to invest in that company, no matter what the value of that company is or that index fund is, and you can buy into it slowly. So again, if you have $5, $10, I recommend starting off small as a new investor and getting larger as you go. Another easy way to, diversify your portfolio is to invest in something called an index fund. An index fund example is VOO, VOO. There's another one called VTIX. There's another one called IVV. But essentially, these are different examples of baskets of stock, and you buy it just like you would a stock. A lot of the times, the price of an index fund is going to be higher because it has a lot of different companies in there. There's going to be something called an expense ratio. You just want to make sure that that expense ratio is 0.2 or less. Pretty much what an expense ratio is, it's a small fee that they charge you for having professionals pick out the different stocks that go into that basket. And again, a lot of the times it's a really, really low amount. Just try to make sure it's less than 0.2%. If you have any questions, drop them down below. Again, the main investments that I have in terms of my index funds are VOO and VTIX and IVV. So that is not financial advice. Another example is QQQ, that's very popular. But definitely research it for yourself, especially if you're nervous about risk. And I think this is a great opportunity for new investors to slowly buy in and figure out how the brokerage platform works and all of these other things. Last but not least, a huge hot topic right now in terms of the investing world is cryptos. So if you don't know already, cryptocurrency is decentralized currency. Examples that you have probably heard of are Bitcoin and Ethereum. Most of my crypto portfolio is with Ethereum right now. Second is Bitcoin, and then third is something called Cardano. And then there are a lot of different small, what we call altcoins, which are smaller cryptocurrencies out there, but they typically follow the patterns and trends of Bitcoin and Ethereum. So that's why most of my investments are with the larger ones, because it's a little bit more stable. Keep in mind that because there's no rules and regulations with cryptocurrencies right now, it's a little bit more volatile. So let's say that the government imposes more rules and regulations around it, it's going to go down really quickly. So again, as a long-term investor with cryptocurrencies, just make sure that you're not in it for the short term, you're in it for the long term. And so don't be scared when the cryptocurrency or crypto market, which typically goes in cycles, dips by 10, 20%, right? You want to have your own strategy as you start buying into it. But again, what we covered before is dollar cost averaging. So I'm going to cover what that is right now. And this is my investment strategy across all of my different investments, stocks, cryptos, and index funds. And so dollar cost averaging is a really, really important technique that a lot of people should definitely know about. The benefit of dollar cost averaging is that you buy that stock, right, as an example, at a high price, at a low price, at a high price, at a low price, at an average price. You buy at all different prices every month. And so when you do that, it averages out. So you're trying to limit your risk because you're not trying to guess the market or outperform the market by just guessing when it's going to dip and stuff like that. It's essentially when you every month put in about $100 into my strong different investment types or a few $1,000s. So you define the cadence in which you want to contribute to it, but I think most people do monthly, and you can automate it in your brokerage platform. Another thing as a new investor I wanted to bring up is when you start investing and you're on social media, let's say TikTok, even YouTube, Instagram, and you see a lot of these gurus or influencers saying, buy this stock, buy this cryptocurrency like Shiba, whatever the case is, do your own research, because a lot of the times it can be, either a scam, especially if it's a new cryptocurrency and stuff like that, or it's going to be a pump and dump scheme, which I'm going to cover in future videos, but essentially those are very volatile. And if you have any questions, drop them down below. So now that we covered the different types of investments, I'm going to be covering really quickly on how to buy and sell your cryptos and how to buy and sell your stocks and index funds. So stocks and index funds, you can view them as really, really similar things, right? An index fund is a basket of stock. A stock is just with one company, and cryptos as kind of a separate realm. A brokerage platform is the platform that you'll use to buy your stocks and index funds. Different examples are linked in the description below, and these are all platforms that I use myself. And with crypto, same thing. But with a brokerage platform, it's super, super easy. You just click into the stock that you want to do to purchase into after you do your research. Then you scroll to the bottom, you'll click buy, and you can either set a dollar amount, let's say $5 or $10, or you can set how many shares you want. So let's say you can put 1 or 2 shares of this company, which again is that sliver that I talked about of that company. Same thing with an index fund, same exact process. With buying crypto, I use Coinbase, and that's linked in the description below. Coinbase is a way that you can buy and sell your cryptos. There is a fee. That fee can range between $1 to $5 from my experience, depending on how much you're investing into that cryptocurrency. But the reason why I don't buy my cryptocurrencies on different brokerage platforms where I buy my stocks is because when you do it that way, technically the brokerage owns your cryptocurrencies and you can't transfer your coins. But with Coinbase, you actually own the coin. So that's why I view it as it's more beneficial to pay that small fee each time I buy. But I do, at the end of the day, own those coins and can move them around to different things like ledgers and stuff like that. It's been about 7 or 8 years now since I bought my first investment. Keep in mind that some of the mistakes that I've made along the way, I've definitely lost a few hundred, and some of those mistakes are something called panic selling. So I wasn't viewing my investments as a long-term strategy, and every time the price would go down, I would freak out and panic and sell it. And that's really when you lose your money versus looking at it from a long-term perspective. 2 is that a lot of new investors forget to pay their taxes. This isn't something that I went through myself, but again, it's called capital gains taxes, and it's really, really important. It's super easy to do, so don't let that scare you off into not investing at all, because at the end of the day, the reason why you should invest is to grow your money and have your money work hard for you so that you're able to retire in the future and things like that. And if you just leave your money in a normal checkings or savings account, your money is actually losing its value over time, and that's something called inflation. So the buying power of that money just sitting in a normal bank account that's not growing, it's going to lose its value. On average, it's about 2 to 3% every year, but with the pandemic, it's about 5 or 6%, right? So if you've noticed, like when you grocery shop or when you do other things, after a year or 2, you'll notice that the prices tend to increase for that, making your buying power lower. That's a concept that I learned in high school, but I didn't really get until I started investing and kind of understanding more about that in personal finance. After you open up your brokerage account, you're able to share that link with your friends. So if you don't have friends or family investing right now that you can't use their link, make sure you check out the description below, use mine, and then once you open up your brokerage account, which takes 10 minutes to do, use your own link and then share it out with your friends and family so that you're able to get that free stock or free reward or whatever the case is when they open up an account. So as a quick recap, we cover the different types of investments: stocks, which are with individual companies, index funds, which are baskets of stock, meaning it's a crap ton of companies in one basket and you just buy it like you would a normal stock. Examples are VOO, that's one that I have a bunch of, and VTIX, and IVV, and QQQ. So sounds like the alphabet soup. Write that down, check it out, do your own research, comment your questions below. Happy to share with you what I'm investing in anytime, and it's not financial advice, just my personal opinion. And then last but not least, we have cryptocurrencies, which are the fastest growing assets of 2020, 2021. The con or downside to that is that it's a little bit more risky, it's a little bit more volatile. The largest ones are Bitcoin and Ethereum, so most of my investments do go towards those two, making it a little bit more stable. The other small cryptocurrencies kind of follow those overall patterns and trends from Bitcoin and Ethereum for the most part. So if you're a new investor, I recommend starting off and you don't like risk with index funds. And that's because it diversifies your portfolio, making it safer. The growth is a little bit slower. VOO, I think on average, it's 8 to 9% every year, which is great, right? If you just put that money in a normal checkings account, your money doesn't grow at all. With cryptocurrencies, it is very volatile. You can make, like so far I've made about 200 to 300% of when I started investing in Ethereum, and about 150 to 200% since I invested in Bitcoin. And again, my portfolio in that area with crypto is a little bit smaller because it's a little bit more risky than what I'm comfortable with. And then individual stocks, some of my key ones that I do there have dividend payouts as well. So I have Facebook, I have Google, I have something called SPG, which is Simon Property Groups. It's known for real estate, commercial real estate, and it gives great dividends. Coca-Cola is another example that has good dividend payouts and stuff like that. If you have any questions, again, I would love to hear them, and make sure you like, subscribe, and share this video if you learned something new. Bye guys, see you in the next video.